What's up, guys? This is a quick review on the Nasdaq on Friday, April 11th. So I'm gonna go with the 4-hour time frame first, like right here. You clearly see that the low of the day is a swing low, and we also been rejected um, the lower quadrant of this wicks right here from 10 a.m. yesterday, right? This candle right here on the 4-hour time frame has formed an order block right here. So we break above that high and close with a strong close, right? This candle right here, retrace inside that previous candle after taking the high, tapping inside the order block, the bullish order block that we have right here. This candle right here was the signal for me to look into a sell side run or a potential buy side run, but I would have preferred a sell side run in that case because we have that 4-hour order block that's standing right here, right? Uh, this candle is an inside bar, so meaning this candle can be considered as engineering liquidity. So it reinforced the liquidity below this low and above that high. That assembly of 3 4-hour candle right here has a swing high on the top because this high right here is lower than this high, right? So this candle right here was not at that time, there, right? So basically you're looking at this change the state of delivery, also order block right here. So I'm gonna plot it after, but I'm just showing you basically right now the swing high and the swing low that we have right here. And also that inside bar that we have prior to 10 a.m. Okay. This is the order block plotted right here. So this is an important level that transcript over all the time frames. So you can basically look into any other time frame. You're gonna see that line, right? That's the important thing. We got relative equal high right here with a very small difference in price in during like that high right here and this high right here. So there's a small gaps that make it like a little bit low resistance, but also it's increasing the amount of liquidity on that high. So that relative equal high was the drawn liquidity. That previous 4-hour low right here was the bar that was inside bar of this 4-hour right here. So basically we're utilizing the low extended forward and we're utilizing that low right here from that bearish candle as well, utilizing both of them as low resistance for a sell side um, stop run, right? So basically we at 10 a.m. open, drop, activating sell side, right? So we're activating the most of the sell side of the day, respecting this low right here from that bullish order block that we have. We got relative equal high standing right here. So basically you want to be engaging in this area right here as a buyer. And your stop must be under this low right here. So I'm gonna basically break it down a little bit on lower time frame so you can see the details, right? And I haven't take that trade at all. So this is kind of like how I back this every day, right? I'm doing that every day for the last close to 9 years right now. Uh, so you're just basically, plotting everything that you know, right? And you're basically building the narrative, and eventually your eyes is just training over time, and that's become a little bit like crazy over time. I promise you. So you just become easier to basically engage with the market, like because your eyes are so sharp that you know exactly what's gonna happen, right? You can see the move unfold. You don't predict anything. You don't think about it. You have the answer in your hands, right? And if it's wrong, like that's fine. You can basically find the reason why and basically just journal about it. But Friday, like, so just I saw this was super clean. I wanted to show you like the example. So I'm gonna basically go on the 1 hour time frame right here. You see at 11 a.m. there's a swing low that has been formed right here, right? When this basically candle closed right here, but the move was already started at that point. but it also reinforced the run for the relative equal high that we have right here. But I'll show you like after. We at that time below the end dog of the current daily range, right? So we got this 1 hour closing price right here and this 1 hour opening price right here. And if you go on the 1 minute, it's the same thing. You can see it on the 1 minute, but the data right here show us that's an end dog that we have right, and it's less than 50 points. Otherwise, it would have the separation. Sell side liquidity, that was a pretty strong swing low that we have right here. You have the low from that inside bar I was talking about right here. And I want to show you in the lower time frame now how it looks like. And remember that there's an order block right here on the 4 hour. Okay. This is the 15-minute time frame. You clearly see the same sell side again, right? I'm utilizing an optimal trade entry right here on that, like utilizing the 0% on the high and the 100% on the low right here. That's pretty significant swing low right here. Pretty significant swing high with pretty shallow retracement. So obviously we're below 50%, everything of that, like that whole area right here, including, basically from 8 p.m. yesterday. So like the whole, some sort of daily range from when the market is getting active, right? So I'm utilizing these swing points right here. And since I'm having this ID to go for the relative equal high, so I'm basically looking for a discount level. And that's the reason why I have my OT aligned on that side. You clearly see that sell side has been taken right here. That was the 4 hour low from the London session, and also that low right here from that basically prior to 10 a.m. 4 hour candle low, which was basically inside bar. So basically, right, it was standing inside preparing for a potential manipulation, and that was basically that sell side distribution that we get right here, taking sell side liquidity into fair value. OT discount reaches for 70.5, but I'll show you like in more detail after. And this is all right here, low resistance condition. So basically you have low resistance condition on top of relative equal high, pretty strong draw, one standard deviation, right? So you're going back basically, it's basically like you're looking for the symmetrical swing of this. Okay, so let's jump on the 5 minute time frame. You clearly see this is the same sell side I was showing you right here. Okay, so this is the same sell side right here. It's pretty sad because the quality of this thing is not really good. I don't know why, but it's a little bit disgusting. I'd like to have a better quality of this. Like, if I use the pure file, maybe, let me see. I think the pure files, yeah, the pure file is actually so much better. So much better. I'll put it on full screen here. So that is the sell side liquidity right here, right? And that sell side liquidity was aligned with an OTE from that swing high to this swing low that I was talking about on the 15-minute time frame. You clearly see there's some sort of engineering of liquidity that's going on in the upper quadrant of that swing high and swing low right here. We dropped below 50%, and every time it dropped below 50%, you can read as well that this right here has been also bought, right? It's also bought, retaking that high, and it basically slowly forms some lower high right here. So that is a manipulation, but also it's specifically a sell side distribution. And that was overall a retracement from that high, right? So basically we got expansion, right? Retracement going back inside of this sell side liquidity. And that's kind of like where you need to start looking for something. So we have this order block, that first bullish order block that you can identify right here, utilizing the high of this candle, right? That little candle. Maybe I can zoom on this. Can I zoom on that? Cannot. Oh yeah, I can. There we go. There we go. So we got the, right, this candle that changed the state of delivery, but this is not enough, right? You need to get more data on that. We have a small bullish fair value gap right here. I don't know why I have this mouse now. So we did retrace like the beginning of the expansion retracement going back for that bullish order block. You can see that there's a very clean reaction right here. And sadly, I don't have the ability to have a real mouse. So yeah, as soon as I zoom, there's an immediate rebalance right here. Another immediate rebalance back to back with volume balance. I kind of like I really like that move up right here. That signified me like that price wants to run for these relative equal high, like everything is there. We got this bullish order block that you also can identify that's still below 25%, right, from the objective. So it's still valid in terms of discount relative to this area, right? And it basically run for that relative equal high, that right here, this high right here, and this high right here, but also including all of those low resistance right here. So that is basically the 5-minute vision. I'll show you the 1 minute right here. Where's the 1 minute? Hello, that's the 1 minute. So we got the same order block right here. This one as well, I'm utilizing this one specifically right here. You see the strong move. These are injection, huge injection, right? 70.5, the kisses right here. We got the previous 4-hour low I was talking about right here. That is the initial condition right here. That's the change of state of delivery, right? That's the retracement, the rebalance of this. We got a small fair value gap right here, this high, this low, and it takes this. I haven't like really annotated it, but I don't know why, because I did annotate it, but it is what it is, right? Again, right here, another small change in state of delivery right here. Go back, tap inside that order block perfectly to the tick. We see that strong displacement up, and then it start the buy program. And it basically purged that buy side with speed. You can see that, right? Rebalance this right here, and basically start expanding forever until the relative equal high, taking all of this liquidity that was standing when we purged the sell side. So that sounds like a little bit, complicated, I guess. But if you look into the other chart that I have right here, so I basically, right, I wanted to kind of like show you this as well. But I coded like the 30-minute opening range from ICT, the AM and PM session, including all the macros. That's a free tool that I've basically offering to the community. Like it doesn't cost you anything. That is pretty accurate and pretty crazy in terms of like how it plots everything, right? And also include the London opening range. And I know it sounds like crazy. It has a lot of things. I can show you the example after on my trading view, but you see like right here. So this is the 9:30, right? We got the 9:30 right here. So the 9:30 open right here. This is where the lines start from the AM highs and low, right? We got the midpoint as well right here, right? This is the midpoint of the opening range. The opening range is 30 minutes from the 9:30 to 10 a.m. We got the first presented fair value gap, including the volume imbalance, if there is. Okay, you clearly see the the pretty insane reaction that we got, right? But that was like prior to 10 a.m. So I personally look for the trade at 10 a.m., right? When this is confirmed and this not change anymore, like you have very relatable data, in my opinion, that you have like a stronger data. You also have the quarter level, so the upper quadrant, the lower quadrant, and all of the standard deviation up to 6.5. Okay, so these are automated and they are extend like till the next day. So basically these standard deviations gonna be extending overnight till the end of the 9:30 to 10 a.m. So basically when this 9:30 to 10 a.m. new opening range AM form, you still have the standard deviation from that previous day. So basically it's a continuous loop, right? It always connect together, right? So basically you also have the previous PM opening range. So like right now at this point, you see this is the PM opening range high, the PM opening range low right here, and that is the lunch macro and PM session. You have the first presented fair value gap from the PM session, right? Right here, there's no volume imbalance or anything like that, so it utilized the traditional bullish fair value gap. And you see on OWI reaches like 0.5 standard deviation right here. So that was basically the objective. That was also matching the relative equal high. But not only that, I'll show you like more detail, right? So just to recapitalize a little bit, because now I was excited explaining you what the tool it is, but I just want to go back a little bit on the setup itself. So you see the opening range was the 9:30 to 10 a.m. right here. So this time of range from the 9:30 to 10 a.m. that's 30 minutes. This is confirmed with the bullish fair value gap inside. That's the first presented fair value gap. If you don't like this first presented fair value gap, you can switch it in the setting of the tool for the second, third, fourth, and fifth. Okay, so there's only fifth available right now. But if you don't like the first one, you can use the second one. And this is extremely precise, I promise you. Like, it's gonna plot sometime a very small volume imbalance that you don't even see with your eyes. Like it's like a quarter of a tick of tolerance. It's insane. Okay. So you clearly see right here, right, that the 10 a.m. open was a purge of the 9:30 opening range low, this data point right here, 18,351.25. And that low right here was also connecting with the sell side liquidity that we have on the 4-hour time frame. That was the strong low. So basically we're including the low right here from that previous 4-hour. That was an inside bar. All of this was an inside bar from 6 a.m. to 10 a.m. That was an inside bar that previous 4-hour, right? So basically you know there's engineering a liquidity and it's ready to go. Okay. The reaction that we have in this area right here was alpha deviation in between the AM opening range low and the 0.5 standard deviation, the minus 0.5 standard deviation. So it's basically minus 0.25 standard deviation, and that was basically the case right here. That's where the moves start exploding, and that's how we can establish that order block and utilize this data point right here, like stand on time, right? And that retracement right here was happening like till the 10:30, 11:30. So like 11:15, 11 a.m. transition on the new hour. It go back right for the a.m. opening range low right here. And you have this small bullish order block that is right, not the order block, but the fair value gap that was right here that you can extend. That was also matching perfectly with that reaction that we get right 11:15. Then the whole thing start right here on the New York lunch macro. So it's basically this range right here. You also have the quarter on it that is actively moving at the same time. We got low resistance condition right here. So if you're still bullish that day, this is your draw, right? That's where you want to go. Like that little high right here, literally the high of the opening range is your first initial draw. Or you can, if you're taking an external range from that AM opening range low, you can aim for a quarter. Right here, you can aim for midpoint of it. You can see the midpoint was like the speed of this run on the sell side right here was compensated like right here really quickly, and you can see that we're going back for the midpoint of it. And you also can see that the PM session opening range, right, that is actually, I was like almost close at this point. You can clearly see that it run for the relative equal highs. So that was the objective, right? And I really like and kind of like what I seen right here was pretty nice. Like we never reached for zero point 0.5 standard deviation. It was extremely close, right? And the fact that this buy side run was really, really aggressive and really volatile, like very speedy, was really fast, right? So that causes a buy side imbalances. There's a lot of buy side imbalance inside of that, right? Because we run through this buy side right here, all of this liquidity, we run through that with speed, right? This is technically right. This area right here was basically like the whole thing is a market maker buy model. That's the way I see it, and that's basically the last stage of the delivery from the MMBM, right? So that's basically where it takes out, the original consolidation or the liquidity some sort. We call them the lazy interbank, and that's kind of like just funny, right? So we did like return inside the AM opening range high. Didn't reach for one quadrant right here, like the upper quadrant. That kind of like made me very interested about it, you know? And just something like, again, to show you like the type of very interesting stuff that I found, and these kind of stuff. Like, you clearly see that the midpoint of the opening range was matching with an 18 Fab 500. That's an equilibrium in big figure, right? So, I don't know, it's pretty interesting, isn't it? But anyways, like this is the old setup. I just wanted to show you what it looks like. Now I'm gonna pause this video for a couple seconds. I'll go over the trading view and I'll show you like the 30-minute opening range indicators so you can basically find out where to get it and everything. Like it's not very complicated. The only thing is I haven't like published it on TradingView, so you gotta basically claim it through the WAP. So, it's basically a very simple process. You just like click accept and everything. It doesn't cost you anything, other than your email or whatever. Like you can use like a bullshit email if you want. But I don't send email really. Like the last 2 years, I haven't sent one email. Okay, so I'm telling you right now. But it's just basically easier to give an indicator by not publishing it on TradingView. Otherwise, you gotta go through the moderation from TradingView, Pine Script guys, and everything, and it's a pain in the ass. Okay, I promise you. So that's why I keep it private, and I basically, just give access to people that claims the tool. So let me show you real quick. I'm gonna pause this. All right, so we're back on the TradingView platform here. Some trade that I took recently on the paper trade, just because sometimes the market, like right now, I'm gonna be honest with you right now, the market volatility is absolutely out of the control. Okay. And the people that right now says, right, like that is the best opportunity to make money or anything like that, these are fucking losers, I promise you. All right. Like it's like it's literally out of control. Like it's not, I'm saying like the market is the worst like I think these are probably, in my opinion, these are worst condition you to trade, because you cannot expect like a run on liquidity, like, and it can be so fast and so aggressive. Like we saw these like 400 points move in like a 15-second candle bar. Like this is insane, guys. Like this is extremely, extremely insane. So I don't know. I will potentially, like right now I'm doing a lot of paper trade, and I've done, some of real trade this week. I've done, pretty good amount this week. But overall, I'm kind of like staying away as much as I can, because, these are insane condition right now. That's just the way it is. Okay. So I'm going to put this on full screen. So that is the name of the indicator. Like it's called the ICT 30-minute opening range AM PM by FX4 Living. The adjustment setting that you have right here is the AM fair value gap manually selected. So if let's say, right, you don't like this first presented fair value gap. This week we got a lecture from ICT explaining, right, that if the fair value gap is disqualified, you can use the next one, right? So let's say you don't really like this one or whatever, you can roll it back to the next one by just adding one right here. And now you see you're utilizing the second one. If you don't like the second one, you can use the third one, right? The third one's going to be this one. You see right here, it included the volume imbalance because it has a positive difference in between the close and the open of these two candles. So that is a volume imbalance. So it include this inside of it. So I'm going to use the first one, and it's the same thing for the PM session. And you can go up to 5, right? So basically you have the selection from 1 to 5. That is extremely precise. It doesn't like plot anything random or whatever. Like that's the real stuff, okay? That's the real thing. Just for your understanding, right? We got ICT explaining that you cannot utilize the 930 as the first presented fair value gap. So we can use the 930 as the first candle into a fair value gap, meaning what? We need 3 candles to form a fair value gap, right? So 1, 2, 3, right? We got 3 candle. Like if I can draw this right here, we have 1 candle, 2 candle, 3 candle, right? So the fair value gap can be in between 3 candle, right? So this is like basically right here, like in the worst case scenario, you have 930 right here, okay? But we can use the high from the 930, and the fair value gap is allowed to be on the 931, okay? But it's not allowed to be on the 930 utilizing 929. It's not something you can do, right? It's not legit, right? It's not according to the rule. And there's a lot of people that basically I got a lot of feedback about the tool. I'm up to like 17 updates right now. That's pretty wild, isn't it? Like, and all of the update so far has been community uh commentary and basically feedback. So I'm just listening to the community and try to make it the best as I can. And it's extremely, extremely, extremely clean. Okay, I promise you, it's insane. Like I've seen like so many days, and I look into like this is insane. Okay, this is wild stuff. Like what a time to be alive. Let's be honest. Okay. And it's only working on the 1 minute time frame, otherwise like everything can get messed up, like because the way that TradingView works, if you go above the 1 minute, right, like now it's not going to use the right data because the candle can change like so dynamically, right? If you go in 15, or like let's say you go in a 4 hour time frame, now it doesn't have the data from the 1 minute. So there's no way to do that, like there's no really way to put this perfectly fractal to the tick, okay? It's just because the way that the data works on TradingView. So I like it to use it on the 1 minute, and basically what I do is I basically split my screen. I have like a lot of screen on my setup, so I can look into this on my main screen and look into all of the other time frame. So I can see, all right, like on this time frame, I got these movement here and everything. So let me show you the rest of the setting, right? So right here it says timing, so like you can show the macros. So these are just specific macro, right? When you uncheck this right here, what it does, if that works, I don't know what's going on. I might have like hard coded it by accident. Actually, that might be another update I must be done. I don't know what's going on. I'm confused. I'm confused a little bit here. Why is doing that? Okay, so I'm gonna fix this. Actually, this is a bug. I just literally found a bug right here. And that was working yesterday, so accidentally, I guess I just potentially changed something yesterday when I did some modification, and that basically accidentally like. But I'm gonna fix it today. Not a big deal. Not a big deal. I like to basically because usually I don't click on it. I like to stay on my screen, so I don't know. Like right now, if I uncheck that, it's not basically removing. I'll find the reason exactly why it's happening. Okay. So you can show the London opening range. So the London opening range is basically from midnight to midnight 30 New York local time. So it's toggling the high and the low of this opening range from London. So this is specific to London, but you can basically refer to that for where you are relative to the London Open, right? So you can basically evaluate the current value relative to these value of the opening range from the London Open. So you know basically where you are in the narrative. Right here, you basically can show midnight open, so that is pretty cool feature, right? You can know relative to where you are to the midnight open, which is right here, right? Midnight open at New York local time. This is a pretty cool feature that I basically cooked last week. It's called the potential ICT Venom. So you guys understand the model itself, right? From the Venom model from ICT is basically you want to see a raid from the range of 8 a.m. and 9:30 a.m., right? So you want to say basically usually you should be basically marking the 8:30 to 9:30 high and you extend it on time, and that must be done in the opening range. So if that happened in the opening range, I don't know if we have one today actually. So you see this candle right here, and that's a potential. Okay, I'm telling you, it's not a venom, right? Like most of the people's gonna say, "Oh, this is a venom." That's not the case right here. Okay, because we don't have like I didn't really go too deep on the logic itself because I wanted to only show the first very minute that basically dropped below the the 8 a.m. to 9:30s. Okay, so look, if I plot right here, I'm gonna show you real quick. This was the 4 hour time frame. So at that time, look, we go to 8 a.m. This is 8 a.m. to 9:30 right here. Okay, to 9:30 right here, and this is the high. I'm gonna basically align it right here, otherwise it's gonna get messy. But so you want 8 a.m. right to 9:30. Is it like? I guess these lines are a little bit illusion for me. I guess this line was wrong, but it's straight. And what it the indicator does basically is it's gonna be identifying the first very minute that drop below either the 8 a.m. to 9:30 or the high from the 8 a.m. to 9:30. So it's only the first, okay? Like it's not gonna show you like the high because the low has been taken already here. And if you put your mouse over right here, there's a little magnify symbol that's gonna show up just below the yellow candle, and if it's on the other side you're gonna get the magnify above, right? If you put your mouse over it says like first 1 minute breaking below 8 a.m. to 9:30, look for a potential ICT Venom model condition. Okay, so what you want to see is basically a bearish fair value gap before, right, this candle, and you want to see a bullish fair value gap after this candle. Do we have this right now? No. So easy like that. Okay, we're not utilizing this. It's not a venom, but you can look for a venom if that candle showed up. And if you don't like the idea, whatever, you can just turn that off. Okay, so you remove it entirely. That basically just triggered a little light in your head that oh, potential venom, so I'm gonna look into it. I guess it sounds like I mean on my end, you know, I've investigated a little bit, and it sounds like it's a little bit rare. Okay, it's not a very everyday event kind of stuff. Okay, it doesn't happen every day, so you gotta really, you know, just investigate on your own. But also, you know, if it rate the 9:30, the 8 a.m. to 9:30 is like a 90-minute liquidity highs and low that you can also pretty rely on, you can clearly see that when we rated that low, it started to go back again right here, right? And it formed a high. But personally, what I like to do, right, is trading from the 10 a.m. Till the rest of the day, like utilizing this data that has been confirmed. These standard deviations never gonna change. These quadrant level never gonna change. Like when this thing formed, right? This range formed, when this plotting these things, these are active, right? They move around, like so the high and the low can be recalculated at any point and at any time. So that is something you gotta consider too, in my opinion. So the indicator looks like this. If I remove everything on my chart, I can basically remove everything. Like now we don't give a shit about the trade anymore because I basically explained it you everything. Like if you remove everything, that looks like this, right? And you have all of the standard deviation. Like this week was wild. We reached some days at 5 standard deviation, but if I reset by default, right, it's 1.5 by default, which make more sense to me. In my opinion. So what do you get really? Like I'm gonna be showing you the lines that you get overall. So if I remove the candlestick, right? So what do you get overall? These are all the components that you get inside the opening range indicator that I've been showing you for a while now. So you get the data points from the AM opening range. I'll put these labels super big so you guys can see better. Okay, I'm gonna put it like normal, I think, or maybe large, I guess, and maybe you guys gonna see better. Well, this is extremely large, but I will not like huge is probably insane, right? I mean, I'll use this for the explanation, I assume. It's just gonna make your life a little bit easier to see, like specifically on 4K. Like sometimes it's not easy because everything is sounds like smaller a little bit. So you can see right here, this is the data high from the opening range AM high. So when you put your mouse over the label, if you're not sure, you can read what is going on, right? You can see right AM opening range low. So 18351.25. That is the exact price of this low. Okay, you have the exact price. When the high and the low is formed, okay, like at 10 a.m. exactly, or at basically 9:59, including the second till the last second, this range is confirmed. Okay, it's confirmed, and it basically plot now the standard deviation that start at 9:59 or 10 a.m. Like basically, it's a transition of 1 second. Right? So these standard deviation are potential projection of that opening range for a potential expansion or either manipulation. So you gotta be, looking at these. You got negative standard deviation from the low, right? You got one full standard deviation, meaning from the high to the low, but on the negative side. And you have the same thing, but on the positive side. You can see right here, like it basically showing you like the percentage, not the percentage, but the plus right here that basically indicate that it's positive. What do we get else? We get the first presented fair value gap. That's the real one with the real volume imbalance. I found the exact logic to be able to code this in this script. Okay, so that is the real exact stuff. Like it's not a random one. Like that's the very first one, mechanical, and it's 100% um, the real first. So if you don't like that first, or if you don't, if you like another one better, you can basically, like I explained in the setting, change it till the fifth. Basically, you can go for the first to the fifth on the AM and the PM. You can do that for the PM too. Like if I don't like right here this PM, I can go on the second one. See, the second one is very small. I can use potentially the third. And I don't have the context. There's no candle right now, but you get the point, right? So from 11:30 the 12 a.m. you got the New York lunch macro. That is basically this little box right here, and it's also including some quadrants inside. You can see these small dotted lines. So you have the quadrant of this, okay? Right here, you got the lunch macro and PM session. So that is the opening range from the PM session. So it's 1:30 p.m. to 1:59. So it's basically 1:30 to 2 p.m. That is the PM opening range. So 18,873.5, right? That is the high, and that is the low right here. That is the low right here. Yet the first presented fair value gap from the PM session, okay, from the opening range. Right here, you got the final hour, regular trading hour macro, so which is basically this 315, right, to 345. Okay, that is specific, and it has the quadrant inside as well. And you got the market on close, right, which is from 350, right, to the 4 p.m. It's the last 10 minutes. That's like the same type of macro as we have on every hour, but it's specific to the market on close of the RTH. And that is sometimes very wild. Maybe not less on Friday, but it's sometimes very wild. So that's pretty much it, guys. It's very simple indicator, in my opinion, right? But it's so useful because it's so precise and it's so simple, to utilize in terms of, you know, ability to see something. Like in my opinion, it's a must. Otherwise, you gotta plot all these things manually, and it might not be consistent as well on the long term, right? That's kind of like the reason why I personally created this indicator, because I wanted to be consistent on these plotting and have like a very good journaling about it and something that is stayed consistent over time. So it's going to always going to be the same thing. The reason why you don't have, and that's like a feedback that I got all the time. Why don't you put like a different color for the fair value gap, or option to change the colors and everything? So look, these are consistent color, and I want to be the standard. I don't want people to be able to change this to purple and this to red and this to yellow, and this gonna become like a clownfish, right? So if utilizing this right here, it's a standard thing, it's not complicated. And the craziest thing, right, is if you go in the background of your chart and you put it black, let's say, it's gonna basically flip the color over. You see that? Like now it's going in dark mode automatically. It's 100, like it's, you don't even need to change anything. So like if you use a dark background, it's gonna basically automatically convert to a very light color. And if you're using the original color of your background, you see how like now it's reapplying everything in black. So you don't really need an input setting for that. The more input setting or user input setting that you put on an indicator or whatever framework like this, the more it become like less consistent overall, because now you're open, or you have the ability to change things that you don't want to change. Because otherwise, if you change these things, you're modifying, or you're basically destroying the vision that you gain over time. That's my point, right? So I would say, just try it out, put it on your chart, and see what it does for you, right? So if you want to get access to this, it's ohlc.group/framework, right? So I'm gonna type it right here. It's called ohlc group/framework. Okay, it's the website, and that is basically the first link on the top. There's like multiple framework that I share with people for free. All of these frameworks are free. I think there are. Yeah, I think there are actually on that page. Yeah, on that framework page, all of the framework that you got there are all literally free. But this one, I'm actually very proud of it. Like, I've been working really hard on that, like I promise you. And if never for some reason ICT like basically find this video, like if you find anything that you maybe think about it or whatever, and if you want to comment on that and you want to basically um let's say you see something that it's not wrong or like it's not correct or whatever, you can tell me. I'm gonna change it because I know there's a lot of people in the community that utilize this right now, and it's basically been trending for a while now. And it's, I want to make sure that it's fine. Okay, it's done fine. I don't want to look like a goofy clown or whatever. But I've done my research. Like a lot of feedback that we got from the student overall. I think we basically find balance and harmony on this, and it sounds like it's pretty good indicator. And it's so simple in my opinion. You don't need really anything else, right? Because you get like literally the framework around the 930. You get all the components you need. Now you just gotta basically choose the PD array you want to use and just run it up till like a point 0.5 standard deviation can be a nice goal. You clearly see right here that was the ID, and it started in this macro of some sort, right? But yeah, so hope you guys enjoyed that video. I don't know if you like this. If you like this video, push the like button. If you don't like it, just put the thumbs down or just click X on the top screen, But I believe it's good content. I think people appreciate that type of stuff. Hopefully, it's going to be educative and anything like that. And we catch next time. Have a great day. Bye.